Hello and welcome to Pro Trader Strategies market commentary for Monday, January the 27th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, how that impacts the overall markets. Well, I do those same things in these daily market commentaries, and not only that, but I also take it a step further and talk about all of my trades that I do, when and where I put those on, and how I am staying mechanical with those strategies. I'm basically using options and creating different types of strategies in and around my assumptions. So check that out. Also, please remember past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get on with the economic data. It is a Monday, so it is generally light to, for lack of a, on regular basis, but we did get some economic data today out of new home sales, and that came in at 694,000, expected to be 730,000. I would have expected this number to be a little bit better. It's first number we've gotten below 7,000 in the last probably 5-6 months. But with the lower interest rates, I would have expected this to be a little bit better, although it is a winter month, or the winter months usually have lower home sales, so maybe some more the colder weather and more snow in the Midwest and other regions has caused the consumer to kind of hold off a little bit. All right, without that, we also have the markets in turmoil today, and that is basically due to the coronavirus. That there is a lot of things coming out today, more cases. Another thing is Wuhan, which is basically the city that's affected the greatest. There was supposed to be a lockdown basically on this city, and people weren't supposed to really leave, but supposedly about 5 million people exited the city, which could actually cause this virus to spread rather quickly. Another thing is a lot of people, as we know, as traders, when we're looking at China's economic data, you don't even hear me talk about it a whole lot. Yeah, I keep an eye on it a little bit, but the fact of the matter is they lie about their economic data, and it is supported by the government a lot of times, where they build cities and stuff like that, so their GDP and a lot of other things are basically a little bit fuzzy. Well, the same goes for this, is they're reporting these numbers to us, the government is. So a lot of people are in a case of, we don't really believe you. Maybe they're giving us half of the numbers or cutting the numbers in half. So a lot of that going around today. But more cases here in the United States. I think it's up to about 5. That's really causing the markets to come off a little bit. Now, do I think that this is an epidemic that is really going to cause a global slowdown? I think really what's happening is, we've talked about this, the markets have been in a major rally mode. They've kind of overdue for a bit of a correction. I think that the market is using this as an excuse to sell off a little bit. Now, the last time, I can't remember what the other virus was, but it was like in 2003, we had about a 10% correction. So keep in mind, we could see that. Another thing to keep in mind is this is the time to probably be doing covered calls. It's going to be very difficult for the market to make all-time highs. I think a lot of things that are going to see coming out here with this coronavirus is that companies are going to cut back on their forward-looking guidance, all right? So they might beat on earnings this season, but we're going to have to really look forward to their forward guidance, and I think a lot of those guys are going to start slashing those numbers just a little bit, and that could cause the markets to correct even more. So we've got a lot of things going on in the markets and things to trade off of. Right now, I'm suggesting, we just did the covered call strategy webinar. I think you should really check that out, because this is a good opportunity to start lowering cost basis on some of these stocks that we own in our portfolio, especially if you don't necessarily think that this is a long-term trend or a major correction. It would be a good time to start selling some calls against those underlyings we have in our portfolio. All right. Without further ado, let's get on with the overall markets. Crude oil coming down even further today, testing that value area low well over What we were expecting, I thought we would kind of pause a little bit, at least at a pause at $55 a barrel, and we have overshot that to the downside, testing $52.71, which you can see right there is lined up with our value area. We actually tested $52 handle, but held support there. Anything below that, you guys, is really a buying opportunity. I haven't added anything with crude oil, but I'm definitely looking to add something because I think it's just a little overdone. You can see there's a lot of support down there at that area as well. All right, gold futures are moving higher today by about $10. That's not unexpected, to be quite honest, with the equities really falling out of bed. Bonds moving higher today. Again, flight to safety. And if you believe that there is a major slowdown going to happen because of this coronavirus, or at least not allow some of these European countries to pull out of this recession because of it, then obviously bonds should start to move lower, or bond yields should start to move lower and the price move higher. Those are inversely correlated. Look at this with the spike in VIX up into the 19 handle earlier this morning. We're giving a little bit of that away, but still up in the teens, volatility spiking across the board. Dow Jones Industrial Average, here we go, down 440 points, down over 450 earlier today. Was looking to test that 200-day moving, or sorry, the 50-day moving average there, but came, we're starting to find support. I think people are taking this opportunity to dollar cost average, which I don't think is a bad idea. If you wanted to dollar cost average in an environment like this, I don't think right now is the time to start going in there and just buying outright. I think right now with this spike in volatility, the opportunity is to sell some puts for your dollar cost averaging on anything you want to add in your portfolio, because that gives us a little bit of wiggle room to the downside in case there's even more of a correction going on here. And it also, if the market bounces up and away, allows you to collect a credit for those as volatility will come out then. So dollar cost averaging, we're going to be doing that on this week's webinar. So if you haven't watched that and are interested, that's something to check out going forward. But selling some puts right now in this environment is probably the best thing to do if you were looking to add stocks to your portfolio. All right, we've got the NASDAQ right here, down almost 200 points on the day. It was down 200 points a little bit earlier. Finding a little bit of support, but I do not see this market really wanting to rally today. It just seems like there's too much of a dark cloud over the markets, and I think that we are going to look for a little bit of further correction. I've talked about this. I thought it would take a little bit longer to get down to 8,800, but you can see we aren't too far away from that at this point. But I thought we were going to kind of roll over a little bit, have a bit of a correction to about 8,800. It could even go further, you guys. We could start seeing 8,500 get tested with this much sentiment in the market that is overarching than anything else, technicals or anything like that. So keep your eyes out for that. E-mini S&P is off by about 51 points off of the lows that were created right after the market opened, but you can see a gap down from Sunday's open, and that is basically because a couple extra people were diagnosed with the coronavirus here in the United States, and a lot of more cases in Wuhan, and the news that basically 5 million people exited that city. And I think they were expecting only about 300,000 or something like that were going to leave. So that was a massive exodus. And that really could spark a outbreak there in China to other cities. All right, E-mini S&Ps, you can see we gapped open lower here, and overnight pretty bearish. And then into today, right off the open, tested those lows at 23.33. Got a little bit of a rebound, but for the most part, I think that the overarching, this is basically where I think some institutional investment came in and started buying, taking advantage of this sell-off here. And there are opportunities out there for sure, but I think as a retail investor, the best thing to do right now is not necessarily jump in, wait and see a little bit. Sell some puts today would be the best way if you wanted to dollar cost average into a portfolio. I haven't done anything with my portfolio at this point. I'm just kind of letting it go, wait and see. I am very close to covering my Delta Airlines trade, although I don't think that they're going to be as affected by this coronavirus as much as some of the other airlines that actually travel to China or are very embedded in China. So, but that doesn't mean that people aren't going to stop traveling here in the United States and in Europe as much. So we're going to have to keep an eye on that. But I am getting an itchy trigger finger on that trade as well. And that's about it. That's all I got for you guys. I hope you guys all have a great trading day. But check out some of my webinars, especially on selling puts, dollar cost averaging, all of those things. The covered call strategy we just did. There's always a bear market. I've always talked about that. Stuff like Boeing is doing very well today. So on the downside, if you were bearish, and so we can always find opportunity out there. All right, that's all I got. Other than if you can't take that, take it easy.